Good morning, everyone. So I said to my panelists, this is one of those topics where the people in the audience say, we're talking about infrastructure yet again, and we're not meaningfully moving the dial. So hopefully after today's session, people have a bit of a sense of the things that are actually taking place and the things that are also likely to take place and where we all need to get involved. The African Finance Development Bank estimates that an annual infrastructure financing gap of about $170 billion across energy, transport, water, digital, and logistics sectors. South Africa must spend an additional 750 billion to $1 trillion a year on infrastructure to reach the growth needed to address poverty and unemployment and lift infrastructure to GDP closer to 25% of GDP. Currently, we're at 15%. And then South Africa's maintenance backlog is also high. Government buildings at about 30 billion rand, water and sanitation at about 400 billion, backlogs at municipal level, roads at about 400 billion, school infrastructure 200 billion, the list goes on. And we couldn't say more because we are in this beautiful city of Cape Town where things seem to work. But most of us here come from the city of Joburg, where we know that the infrastructure backlog is closer to about 220 billion rand. All these problems are things that need to be solved, and we are capably led in this country. Despite the views of some of the politician strategists earlier on, we believe we've got what it takes to make it in this country. So Dr. Satwi, let me start with you, with your perspectives from the World Bank, and I think really an organization that has been working in this country for many years. It would be interesting to hear from you lessons that we can learn from other markets on structuring of efficient, scalable infrastructure models. And yeah, maybe let's start with what the World Bank regards as success from their programs in South Africa, and then a little bit from a global vantage point on where South Africa finds itself, our challenges relative to other emerging markets, and particularly what we can do better.
Thank you very much, Mary. So let me first very quickly say what our goal is here in South Africa. I mean, in every country where we work, we actually aim to improve the living standards of ordinary people. Specifically, our goal for the next 5-6 years in South Africa is to support growth acceleration to create jobs. As we know, the unemployment in this country is extremely high. And that's where infrastructure is coming in a major way, because it's a foundation for the private sector to basically operate. Without infrastructure, investment will not come in, finance doesn't flow. So that's why we are focusing on that as a foundation right now very heavily. And we are very pleased that the GNU, that was the topic of discussion in the previous panel, is also prioritizing very much improvements in infrastructure. Now, you were asking then that what is it that South Africa can learn from the rest of the world in improving infrastructure? I mean, as you all know, you don't need to say that after the decade of state capture, there is an infrastructure crisis in this country. You heard about the numbers that Mary mentioned. And state simply doesn't have the needed money to finance all the upgrading and expansion that's needed. So what do we learn from other countries, say Turkey, Chile, Brazil, is that bringing the private sector in is very important in these kinds of situations. But just bringing the private sector in itself doesn't work. You have to first work on the reforms. You have to fix those sectors, the infrastructure sectors. Money doesn't flow unless there is confidence that there is going to be, that the off-taker, this in case the public sector, will pay back. And unless they see that the government is very serious about the reforms. So the first thing, what the successful countries like Turkey have done, they have been very transparent and open about their long-term vision for various infrastructure sectors. They have put their plans out very transparently and then opened it up for the private sector. Again, in addition to reforms and knowing that the government is serious about fixing the issues in those sectors, private sector is worrying about the repayment risk. And what is important then to provide is basically risk mitigation, risk sharing mechanisms. And in fact, this is, I'm very happy that we have Makoshi and Boitumelo here on the podium with us, because we are working all together on a credit guarantee vehicle here in South Africa. And so we have a two-pronged strategy. The first part has been to support the government very much on the reforms in energy, in logistics and water. And then the second part is to bring in this credit guarantee vehicle. We are establishing it for South Africa to mitigate the risk of repayment, to bring in the private investors at scale to South Africa. Let me stop there and then I will come back later.
No, thank you very much for that, Dr. Satu. I will come back to you a bit later so we can drill down a little bit more in that, because I guess in a fiscally constrained environment, the kind of interventions that you are speaking to are really what can make a meaningful difference. But Boitumelo, let me go over to you from the DBSA perspective, because I know there's a lot of focus that the DBSA puts on putting additional effort through technical assistance to making sure that projects come alive. But I suppose from your perspective, what does success look like for South Africa? Let's start there.
Thank you, Mary, and also to Emery and the RMB team for the opportunity to be here today. And good morning to all our colleagues and partners in the room. What does success look like? When you look at, in the context of South Africa, and it's important for us to reflect on what we have achieved. Because what we have achieved inspires us in terms of what is possible and what we can do at scale. If you look at our road network as a country, it's probably the longest well-built road network at the national level on the continent. You look at Transnet in terms of, yes, there are challenges, but we are making a turn. If you look at the integration project that even today we're still benefiting from, and are now at phase 2, which is the Lesotho Highlands project. So there are these examples. Independent power producer program. We have a history where we have achieved and made progress when it comes to infrastructure. We currently in a position where it is challenging when it comes to the water, sector, and we've just come out of. I mean, Eskom has done exceptionally well in actually getting generation consistent for the country. So one of the things that we need to firstly get right as South Africa, and this is in terms of our decadal strategy as a bank, is a key priority, is capable and strengthened municipalities. It's all good and well to have strong bulk infrastructure, but if the water cannot get to the households, if the water cannot get to the businesses, then it becomes a challenge. Now, that is one thing that we need to focus on, to then say, how do we support municipalities to actually get to a point where service delivery is enhanced. When you look at the percentages in terms of access and the infrastructure that is there to enable access, they're way above 80%. But when you look at what's happening on the ground, the dissatisfaction by the citizens is quite high. And that is the one thing that we need to work on and focus on. So success, firstly, is your capable and strengthened municipalities. As an institution This is the support that we provide, not only at the metro level, but also at the under-resourced municipalities as well. But the one thing that we have agreed on as an institution is it must be willing coalition. If, as a municipality, you want to enhance service delivery, then we can collaborate and work together. We provide the technical capacity to do that. And we then partner with the private sector. I'll give an example, Mary. We are implementing what we call a district model. We're currently in 8 districts across the country, and it was simple. If you want to achieve a local economic development in your municipality, let's partner. We do a full diagnostic of where the municipality is. What are the infrastructure needs within the municipality? What is required to strengthen capability within the municipality? If there's engineers, we then enter into partnerships to then provide that. What are the industries that can be created? And what is the partnership model that is then required to then do that? Within the last 3 years of implementing this project, we are now at a point where we've even identified as an institution where the gaps are. And we've identified that actually within the municipal space, we need more capacity for preparation. We need more capacity for planning. But at this time, it's more integrated as opposed to fragmented approach. We're currently looking at a pipeline of cross-sectoral projects of it's about 13 billion, but these are your under-resourced municipalities. When you look at the need in South Africa, together with the World Bank, we did a gap analysis. We need about 14 trillion to 2050 across various sectors when it comes to infrastructure. So the second level of success, what success looks like. Success looks like implementation of the plans that we have as a country. We have our integrated resource plan of an implementation of 105,000 megawatts. That needs, we recently, Minister Barbara Creasy recently released the rail plan, which is going to require about 2 trillion rand. So all of those aspects that we then have, they need to be executed. We need execution of our aspiration and our plans as a country. The last thing that I'd like to then mention on what it looks like is that this is not a South Africa play alone. South Africa actually has to position itself strongly for regional integration, and that talks to how then we leverage our strengths as South African institutions, both DFIs, the commercial banks, the private sector players, to say how do we then together enable infrastructure development for the rest of the region.
Thank you, Boitumelo, and I appreciate you touching on the role that the DBSA in particular plays where there are systemic weaknesses, because I think we can analyze and talk about what needs to happen, but somebody has to roll down their sleeves. I'll circle back to you later on perhaps examples you can give us of municipalities where the interventions have been successful, because as we know, most of the people in this audience wouldn't have experienced that because they live in different places. But let me go to you, Makhosi, and from an IDC perspective. I mean, you've been in your role for now less than 2 years, and it would be interesting, I think, for the audience to understand the IDC's strategy in driving real economic activity versus capital allocation, because I guess the IDC sits at the heart, at the center of the industrialization agenda for the country. And I suppose from your time in National Treasury, you also understand some of the challenges that South Africa has from your perspective. But I think, once we've gone through the things that we've been talking about, what does success looks like, what does the IDC aim to achieve, and how does it contribute to taking South Africa to the next level?
Thanks, Mary, for the invitation, and good morning, everyone. Most people in this room will remember the IDC's role It's an 85-year-old organization, has built industries, some of which are now multinational industries, and they have really succeeded globally. And, for me, coming into this role was looking at how, as a small open economy, South Africa faces headwinds globally, some of which we can control, some of which we can't. So a country without ability to benefit from its own global, internal demand, it's not going to succeed if you're only focusing on exports. Exports are important, but I believe that domestic demand is equally important. So the IDC is refocusing on the challenges that Boitumelo Mosako has mentioned to support industries that can also benefit from this huge infrastructure drive that we are all looking forward to. So the strategy going forward is really the IDC being more of a catalytic industrial developer and of industries that are going to support energy. So we have been very successful in the REAP program. We've got close to 12 billion rand of portfolio in that program, and we want to use the lessons from the REAP program to move on to the transmission development program, and ensuring that we believe that this program gives us an opportunity to expand localization, because the work that we've done, we've just signed an MOU with the NTSA. The work that we've done shows that close to 70% of the components that are required for the TDP are available in South Africa. So that does two things. It localizes the program, and it also makes sure that we can utilize the components that we can manufacture here at home. So for us, the green energy space, it's a big space. We have already demonstration plants that are looking at battery manufacturing with lithium, and now with vanadium, which I believe Eskom is now already certified. So the green economy is a sector that we're looking at within this strategy of becoming more of a catalytic developer. And critical minerals, which are going to be required if we're going to be succeeding in building this battery program going forward. Through partnerships with other countries as well, coming in and identifying them. And the private sector is going to be very important. We've just recently signed an agreement with Anglo American to support junior exploration mining, but focusing mainly on critical minerals, because we also, mining was a sunset industry, but with critical minerals coming to the fore, it's something that provides us opportunity. In my time here in the Western Cape, I've been talking very much about agro-processing. I believe there's a lot more that we can do in agro-processing in this region and others that we've not been able to explore. But as I said, I think our strategy is to really move beyond our legacy sectors that we've been known for, manufacturing, mining, but looking at the green energy sector, and we've already started there, and with agro-processing going forward, and also focusing on critical minerals. So those are some of those. And we also want to utilize the opportunity that's provided by the AFCFTA to go mainly into the region and take South African business with, as we go into the region, and use the catalytic opportunity that we have as the IDC to blend funding to support our industries as they're going into the rest of the continent, where I believe there are lots of opportunities for them as well.
Okay, Makhoshi, but it's really very pleasing to hear that the IDC is looking beyond the historical sectors because of the relevance that those other additional sectors that you have highlighted, both for South Africa and for the rest of the continent as well. So I wish you well in that regard. Maybe just staying with you, I mean, where are the coordination gaps at the moment? And I guess in this theme of the public sector and the private sector working closer together, what is the ideal well-oiled machine? What does it look like to unlock further capacity from agro-processing, for instance? What do we need to all do?
So let me use an example that Satu just used, because that's the one that comes to mind when you put women in one room.
Yes.
Thank you for this panel. So we basically, the three of us are now supporting the credit guarantee vehicle. What is it going to do? It's going to de-risk infrastructure projects going forward. And at the moment, we're looking at the transmission development program, but we're also going to look at it with regard to logistics, for example. And it's something that institutions like ours that bring in a little bit soft money, we'll be able to blend it with private sector funding in order to support this sector. So the CGV is an initiative that we are all co-sponsoring to say, as SOEs coming together with the World Bank with experience from elsewhere, how do we use our balance sheet to coordinate in order to support and do one important thing that's just to de-risking some of these projects. But what it also does is that it basically shines the light on what is possible in other sectors. And I believe, with wearing my former hat coming from the Treasury, is that, the government sits on a huge incentives budget that if one was to look at it and how do you use it to support manufacturing or to support industry in its broader sense, what needs to be done. And I think that this is something that through the Treasury and the other department, especially the leading ones in industry, need to look and review and see how can the incentive structure and budgets in government be more forward-looking to support industrialization in the country.
Okay, I'll let your colleagues also touch on a bit of that. But Dr. Satu, just turning back to you, and maybe just circling back to the question around what do countries do when there are fiscal constraints and they're facing the infrastructure backlog that we are. I mean, from your perspective, if you were to prioritize 3 system-level reforms for South Africa to unlock infrastructure delivery, what would they look like?
Very good. Thank you for that question. I think that the first priority for every government that is facing this kind of a situation where they do need to very quickly, upgrade and expand infrastructure is to basically be very open and upfront and establish a very credible reform program. And I'm happy to see that South Africa is doing that and implement that. Because the worst thing that the country can do, and what we have seen in countries that have failed in their efforts, is that they launch something, but then they either change the rules in the midway or they stop implementing. So that is pretty much a no-no if you want to get the investors in. You have to have a long-term predictability for the implementation, for the investment, and for the money to come in. So first thing, do the reforms, and not first financing. But the second thing is, open up these sectors for private sector participation. When you are in a fiscally constrained situation, the governments will not be able to finance things all on their own. And I think Turkey is a fantastic example for South Africa. If you look at what they have achieved in a matter of, some years, obviously, but they have multiplied their infrastructure capacity by teaming up with the private sector in a very transparent and predictable manner. So the first thing, reforms. The second thing, open up the sectors for private investment. The third thing, which I think is extremely important in South Africa, and what I would say, strengthen the regulators. Strengthen regulators in the energy sector, in the transport sector, and then in water. Because that is very important to give the credibility and give the confidence for any private investor to come in. To have a credible regulator that is setting up the tariffs and referring what is happening in that sector in an impartial manner, purely from the technical and professional point of view. So those are the three things I would say at this point.
Okay, no, I think that's important for us to remember, as particularly given the political transition that we know will be underway, but key for us to stay on track with some of the reforms. Then, Boitumelo, if I circle back to you, I guess we spend quite a lot of time talking about new infrastructure, but maintenance seems to be at the heart of what is also getting in the way. So maybe a little bit about what the DBSA is doing and what more needs to be done.
As a DFI, I think it's about 15 years ago when we identified an opportunity on how to augment state capacity through building of infrastructure ourselves as an implementing agent, and also through maintenance. Now, through our infrastructure delivery division, we augment state capacity with implementing infrastructure. We've been given the opportunity as an institution to rebuild Parliament post the fire. We are currently building the first academic hospital post-94 in Limpopo. It's about 4 billion in value. And we've also at completion stage of another hospital in Siloam, that is Vembe district. So these are the services that we offer over and above the financing as the DBSA. When it comes to maintenance, we actually do offer maintenance services where we work with partners, for instance, in the union buildings. We have a total facilities management entity there that is supporting, and in other areas as well. When it comes to the service offering, even at the municipal level, we then offer asset care capability within the under-resourced municipalities in putting systems to identify where maintenance is required, and then how to then respond to that as well. So those are the various areas where we then do that. And maybe just to add, when it comes to on the infrastructure side, based on what she said, when you look at the programs that the state has put in place, South Africa needs a strong state, and it also needs strong private sector, so that we can all leverage our strengths for the benefit of the country. Mahoshi mentioned the REAP program. There's the transmission program that is housed within the IPPO at DBSA. We have the water partnership, which the Water Partnership Office, that's specifically looking at water reuse and also minimizing non-revenue water at the municipal level. It is a collaboration between states, it's collaboration, it's the departments, it's DBSA, and we also have the private sector involved that have deployed some of their capacity to then provide solutions for that. We have the public sector participation in rail program. That's another 400 billion opportunity that has been developed and structured so we can implement that. We prepared the one border post solution for the country. I think the 6 out, the RFPs should probably be closing soon. And I think these are the areas where we can see. The last one that I want to mention is the Infrastructure Investment Office, IFISA, which is an office that is actually going to bring together the infrastructure fund, GTEC in National Treasury, and municipal infrastructure division. Basically, that is going to then drive and accelerate a lot of the PPP arrangements that needs to be unlocked, raise the required BFI budget facility for infrastructure to enable blended finance structures as well. So there's quite a few initiatives happening that do not only, that are not only enabled by the state, but that also drive private sector participation.
And okay, my question about which municipality is in a better place after some of the interventions? You skipped that one.
Well, when you look at which municipalities are in a better place, and that's why I'm saying that in the last few years, that's when we did the integration. What we've been doing in terms of the planning, we've unlocked infrastructure in various of them. I mean, we've been in this space for a very, very long time. On an annual basis, we unlock for your smaller municipalities 2 billion worth of infrastructure through our planning capability. We've supported with revenue and enhancement. So there's quite a lot that is actually happening. Unfortunately, in the country that we live in, you don't really get to hear the good stuff.
Yes, that's what I was hoping you're going to share with us.
It's always about what is then not happening. We have a whole water scheme program in the Vembe district. So there's a lot happening where we are supporting as the DBSA.
Thank you, Boitumelo. I really hope that you'll be sharing a lot about those municipalities that become a template for what needs to happen. Because not only do we need to know, but I think we need to also be able to appreciate how we support as citizens. I've got a few questions from the room. Some you would have touched on, but I think we don't have a lot of time, so just maybe be very brief in your answers. Let me give this one to Dr. Satu. So what needs to change in South Africa for infrastructure programs to continue, regardless of political office, given that Turkey is cited as an example of long-term policy certainty? I think you already have given some of those answers, but maybe you can reiterate.
That's a billion-dollar question. I think, how do you ensure the continuity? I think that there is now a little bit of a rush to try to get some of these ongoing initiatives and reforms implemented and approved before local government elections. So I would say that, accelerating what is being planned now and their implementation is extremely important before the biggest uncertainties come. So try to get things to a point where they cannot be reversed. Now, I would actually like to be, hopeful that given that the reversing of some of this infrastructure reform would be so costly to the country, that whoever comes eventually to the power, I hope that we won't see the reversal, because this fixing the infrastructure, getting energy, getting logistics, getting water to the people and businesses is so fundamental.
Okay, then there's another follow-up to you. Why has the credit guarantee vehicle been delayed so much, given that it's a massive catalyst for infrastructure development to unlock for both energy security and decarbonization? So this is to the World Bank.
Okay, it's actually a huge undertaking. And I think when we started its preparation, we knew what we have to do and where we need to go. But given that there are multiple players involved, and a lot of the things that will need to happen are beyond our control, there are also political decisions that will need to happen. It has taken more time than expected. And believe me, we have a very large team working on it, and this team is working on it day and night. There have been moments when I was worried that the team is hardly sleeping. But we see the end in sight. We are actually planning to submit the licensing request to the South African Reserve Bank on this coming Friday. And the aim is to have the credit guarantee vehicle up and running by the end of this calendar year. This is what the government of South Africa, the president of South Africa, has basically asked us to do. And we are very much, working towards that timeline, and things are on track right now.
Okay, thank you. I think let me give this one to Makhosi. The only thing that's unfair about some of the questions are that I wish we had the Deputy Minister of Finance to come answer some of the questions, but I know you'll do your best. South African corporates have 2 trillion rand in cash on balance sheets by some estimates. How can regular corporates with excess cash invest in infrastructure development to support it, assuming the policy is right? And what are some of the expected return profiles?
Yeah, so that is definitely a policy question, not fair. But I would say this, I've seen Wikile was sitting right there. He is in this audience. There's a lot of work that they've been doing in terms of the sovereign debt nexus to really look at making it easier for private sector funding to come into supporting infrastructure. However, if you ask the Minister of Finance, he will tell you that with institutional investors, they've actually created that space, and yet they are not seeing the money coming into infrastructure investments. And I think the big question is why. So it probably is not the instruments themselves that need to be created. It's the issues that Satu has been talking about, and the coordination work. Since I took over in the IDC, I've actually realized that the issues at the macro and the micro sector are so intertwined and connected that you have to work in an ecosystem to enable. So it's really no longer about money. It's not about the instruments that you put in place. It is somehow about the type of instruments, which is where the CGV becomes important. But it's mainly in unlocking the bottlenecks at the municipal level, the work that Boitumelo is doing, and elsewhere that is going to make funds flow in. So for me, it's really not about what can be done to unlock. It's about making the environment conducive for private sector funding to flow in and support infrastructure.
I think maybe just to add, Mary, it's also about having a strong pipeline of bankable projects that are transparent to institutional investors to invest in. And it is a priority of our institution, like I've mentioned, the various programs that we've done, but we're increasing our capacity to invest in project preparation, so that there is a pipeline of projects that can be packaged and even listed as, because the institutional investors like listed instruments, where we can then issue infrastructure bonds that they can participate in to actually fund the infrastructure. We can do sector bonds that can then do that, fund our health programs, fund our water programs, and that's the opportunity, the big opportunity that is there to even solution for some of the challenges that are here.
And because I'm off to an investor roadshow in the US, I'm going to be asked that, okay, what is actually shifted in this having bankable projects? Because they look at our balance sheets as banks and they say, okay, but you can lend, why aren't you lending? Are we seeing movement on our ability to generate these bankable projects, Boitumelo? Maybe
Yes.
just briefly.
Yeah, we are seeing movement, but not at the scale that we need to see. And that's where the opportunity lies, with the collaboration between development finance institutions and commercial banks. In that, where commercial banks are seeing their gaps, it's not for them to say there's a gap, we can't participate. They can then say, okay, DFIs, how do you then come in, de-risk these transactions for us, because you have the appetite to do that so that we can participate. It's going to require a collaborative model between the DFIs and the commercial banks as well, because they have their own restrictions in terms of Basel. We can play the longer term game and go a little bit up the risk curve in providing capital. And I think when it's very clear how we can appropriate the risk to the capital that is provided, it is no-brainer that we can actually get the scale that we require.
No, thank you very much, Boitumelo. I thought you were going to throw the commercial banks under the bus here, but you've decided not today. Okay, there is an interesting question here. Maybe, Boitumelo, I'll pose it to you and the World Bank. It says, how open are the panel to support finance payment platform infrastructure in South Africa and broader Africa to bank the unbanked and support banking infrastructure for foreign nationals?
National payment system reform, if I heard
Yes.
you correctly.
Yes.
This is actually something that it's a big priority for us. We are concerned that there are about 15 million people in South Africa that are unserved by the formal financial system today. And we know that also the SMEs, they would actually need about 30 billion US dollars in terms of lending. So the demand is there. Now, and I moved to South Africa 2 years ago, and I was very surprised when I saw how many people in this country are operating on a cash basis. You go to townships, you see that people may have bank accounts, but every time the paycheck comes, they go and just take the money, and then everything is done with cash. The mobile money doesn't exist. And then we started looking into this more. What really needs to happen? And it is basically opening the national payment system also to other non-bank players, so that the mobile money would come to this country. We have seen all throughout Africa that it has made a massive difference and generated also, a lot of economic activity. And so getting through, I understand Coffee Bill is now in the Parliament, and it's very important that then the next bill that goes through is the National Payment System Bill. Opening up the system for the competition, opening up for more fintechs, for more non-bank providers of other opportunities to transact in South Africa.
Okay, I think in closing, I'm going to ask you just a brief question, which I know the answer, then there'll be a follow-up. So Boitumelo, are you hopeful that this moment where there's a reset, that Africa is actually going to show up with a step change in infrastructure build? And I suppose in the case of South Africa, also the keeping up with the maintenance. Are you hopeful?
Very hopeful. There's no better time for Africa to rise. I like the caption, there's no better time than now. And looking at where the world is, we as Africans are at an inflection point, and it's time for us as Africans to leverage our institutions, to mobilize our own capital, and to actually build our own infrastructure. The Africa Finance Corporation has estimated that there's $4 trillion in capital on the continent, and it starts with us. No one's going to come and do it for us. We have to lead in our infrastructure development, and I commend the RMB team for this engagement and this specific theme on Africa Now, because I believe the time is now.
Okay, you believe the time is now. And Dr. Sato, do we have the institutional capacity and the willingness to utilize what the World Bank has got available for us to leverage?
I would think so, and I think that there is now a recognition that the infrastructure will need to be upgraded, it will need to be expanded, and I do commend actually the South African government for taking now very decisive steps, starting with energy, next logistics, and then water, to basically to fix the systems. There's a lot of work to be done, but I'm very hopeful. Like Boitumelo, I'm very hopeful. I hope Africa will be rising. And I do want to say also to everybody, because there were questions about credit guarantee vehicle, yeah, it may be a little bit delayed, a few months, but it's coming.
It's coming. Okay.
Yeah.
And Makhosi, with the work that you are doing, are we going to see our GDP growth lift at some stage towards 3%? Let's be modest.
Yeah, that's what is in the MDTP, the Medium Term Development Program of government. It's a 3%. And really, we have no choice, right? You either hit with 50% tariffs coming from the West, or you are hit with cheap imports from the East. So for me, domestic demand is what's going to lift this country, and I believe that there are opportunities for that. Once we deal with the costs that come with energy and logistics, and I see that the unions are now more friendlier because they are worried with jobs, I believe that we can hit 3%.
Okay, thank you. I think that's all the time that we had this morning. Can give our panelists a round of applause. Thank you, ladies.